Hello and welcome. You're watching us here on Halftime Report. I'm Mangnam Malu. With me is Ekta Batra. There are a lot of numbers flowing in as we speak. There are also there's commentary coming in from the Tata Chemicals con call, which is currently on the stock, locked in a temporary freeze. But as we talk about numbers, it's time to get listening to what IGL had to say in terms of their first quarter performance. An inflationary environment where gas prices went up, the company reported an EBITDA per unit at rupees 8.6. The stock at the high point of trade. Sonal spoke with Sanjay Kumar, who's the managing director of the company, about the numbers.
First thing is about EBITDA per SCM. We have been able to get 8 rupees 60 paise this quarter. And you have rightly told there are some challenges, there are some pressures which are coming from the cost side. And we expect it to be over 7 rupees for this whole year. But going forward, since the prices of the CNG and PNG gas is going to go up again from 1st of October, this is a challenge that all CGD companies in the country they are facing. Regarding the volume, we hope to maintain the volume trend of about 7.9 million cubic meter or 8 million cubic meter per day for this whole year. We are not seeing, it will be very, difficult for us to increase it to 8.5 million if these prices are maintained, but 8 million cubic meter per day is maintainable. That is the view here in the company.
Okay, that is good to know. So you spoke about EBITDA per SCM at around 7 rupees. Of course, we have been talking about higher prices. Unified prices, that is the uniform basic prices, my bad, is increased in August to around $10 per MMBTU versus around $8 per MMBTU that we saw in the month of June. Considering that and the fact that you've not taken any CNG price hike since, say, May 2022, what is the price hike that you're looking at? And do you think that is something that will impact volumes for you?
See, we have two aspects of this question. First thing is that we can pass on the cost to the consumers, but that will affect our volume and that may affect our conversion rate. IGL is really focused on maintaining the conversion rate of vehicles because we need to protect our market through this challenging period of next 3 to 4 quarters. If there is a permanent damage to the market, we will suffer in future. We would like to maintain the conversion rate, and that is why we are always thinking twice before increasing the price of CNG. That kind of, if we pass on and the price is say 95 rupees per kg or 100 rupees, it will affect because petrol and diesel prices are very near.
Yes.
We
so,
don't
Mr.
have
Kumar,
much headway.
So exactly. So does this mean not many price hikes are on the cards in, say, in near future? And what is the current conversion rate? What was it in Q1 if we compare it to, say, Q4?
The conversion rate is continuing at around 15,000 vehicles per month. And there is no dip in that. But and that is why we have kept the prices. We have not taken any price hike in recent weeks. We hope to maintain this conversion rate so that when the world market cools down, when the pressure on the gas prices goes down in next 2 to 3 quarters, we will again have the growth coming back much more than present growth.
Okay. So, Mr. Kumar, you spoke about how going forward gas costs might increase and you might not be able to take price hikes the way you did earlier. What is the gas sourcing looking like right now? Any contracts that you've signed, any other sources that you're looking at which would be priced at a lower cost?
So recently, government has announced UBP scheme, UBP mechanism under which the LNG is RLNG or domestic gas that is mixed in the APM, non-APM gas. And that is why this price is slightly higher than what it used to be earlier. But those days we were, mixing a lot of RLNG, which was coming at higher rate than the present $10. So effectively, that is why you can see our margins have been maintained. It's not that this mechanism is bad. It's just that present commodity market is, posing a lot of challenges for all the CGD companies.
Oh, that it is. So in that case, would the OMC commission matter add to the woes? Any update on that one? Because they had been asking for higher commissions from all the city gas distribution companies.
So currently, the OMC's trade margin that we are paying currently, we have an agreement on that now. So we have resolved that issue for the current period. And OMCs are very important part of IGL business. And there are no disputes for the current period that is going on. There was some increase, but it is not to the extent that that was initially thought of and reported in some media.
Okay. So there
channels.
are no further increases expected. And what was the increase earlier? Like you just said, it was not as much as it was reported. What is the increase that the commission has seen?
Let's leave it. There is an increase, but the dispute has been resolved for the current period.
Okay, so will that hit your margins added by the gas cost woes that you're already talking about?
Not really. We have paid the higher margin, trade margin for last quarter also, and you can see the 8 rupees 60 paisa is still there.
Oh, okay.
We have paid that higher margin for the last quarter.
Okay, I would have liked to know the number because I'm sure the investors would be interested in how much have you paid as far as those trade margins are concerned. I would like to try it again. With that also, what is the guidance as far as PNG and CNG pump addition is concerned for this year?
We are planning to add 70 to 75 CNG stations this financial year. And we hope to add them because we are making good progress in these stations.
And a number on the trade margins, how much was it in that 8.6 rupees for SCM? How much did you pay?
No, the trade margin is, it's more than, earlier we were paying, I think, 4 rupees some paise, and now it is 5 rupees some paise.